Hey everyone, Brian Bogner, Greg Towner here with Parallel Portfolios. We're going to take the next few minutes. We've got a lot of exciting things to talk to you about. As this chart says, we're going to talk about rotation. What does that mean? Inflation, housing. It's our March market outlook. Not only is it March, we just had the 1-year anniversary a year ago. As you remember, the market was down like 30%. We were all locked up in our homes. It was a very, very, very different time. Good news is, people are getting vaccinated. The market has certainly more than recovered from that low, and there's a lot of good things happening. So let's go ahead and dive right in to it. Greg, take it away.
Yeah, thanks, Brian. It's definitely been a crazy year to say the least. The market has had one of its strongest 1-year rolling periods ever. It's brought a lot of new investors into the market. It's been fascinating to watch. And so the market's been pushing higher. It continues, if you look at the broad market like we are here, it continues to be pretty healthy from a longer term trend. No major red flags on the surface. Underneath, there's a lot of what we've been talking about in recent months, rotation. There's just a lot happening, whether it be, small caps did great, now recently are getting hit, growth is getting hit. Emerging markets were doing great, now they're getting hit a little bit. Obviously, interest rates are going up. Just a lot happening under the cycle or under the top of it. And that's really normal once you get past that initial year one surge for stocks. The economy looked terrible last year, but the market did great. And now this year, the economy is looking better. It's going to be a little more of a struggle for stocks, but still overall pretty good. So what we're looking at here is a chart going all the way back to the 1990s. This is a relative chart of the Russell 1000 value compared to the S&P, okay? So when the line is going down, the S&P is outperforming value stocks. What do I mean by value stocks? Well, in this instance, it really categorizes those that are more tied to the economy, maybe financials, industrials, energy, materials, that sort of thing. Whereas the S&P has been heavily weighted towards areas like tech, for example. So we've seen the S&P has greatly outperformed value for more than a decade now. And in recent months, value has been really strong. But if you look at this longer term chart, it's actually only just started to potentially reverse this longer term trend. And we don't know if it's going to have the kind of move like it did 20 years ago, back when we were starting our careers during the tech bubble. But we should keep open-minded to the fact that the leadership by growth that we've had for more than a decade could very well be over.
Now, that being said, Greg, I do want to put a plug in. We are going to be recording a presentation, I believe, next week that really dives really deep into this rotation. Because if you look back at what's been happening over the last 10, 12 years, we've been saying this for a while now. We're not quite sure the next 10, 12 years are going to look the same. So we're going to actually spend a little time and dive deep into that. So stay tuned for that presentation that's up and coming. Now, Greg, I do need to ask you about this next slide because I was at the grocery store last night. This weekend, it's turkey season, it's turkey hunting season here in the great state of South Carolina, and I get to go turkey hunting. So I was buying some snacks, and I got to the counter, and it was like $50 for some chips and apples and things like that. And I went, oh my gosh! And I know there's a lot being talked about inflation. What do you got here?
Yeah, I mean, inflation has definitely become a hot topic of late. I think we're seeing it in a lot of areas. I think the big concern is that it's a structural problem and a shift because of whether it's all the debt or the stimulus or what have you. And that's certainly possible. But let's not forget, people have been calling for inflation to really go high since the great financial crisis more than a decade ago, and it hasn't yet. So what we wanted to show in this chart is each time coming out of recession, like we are now, inflation tends to spike initially coming out. There's usually a lot of issues around productivity and logistics and supplies. We're definitely seeing that now. You hear all the stories of car makers can't get their chips to make cars and all these different things, supply issues. So that's happening right now, hurting us from the inflation standpoint. Could it be more than that? Could it be structural? Perhaps. We don't know that yet. But we think investors should keep open-minded that this is, so far at least, a normal aspect of inflation when you come out of recession, and we'll see how it looks looking out a year or so.
All right.
Now, speaking of inflation, I think we've all seen housing markets through much of the country just explode here in recent years. And a lot of people say, oh, it's another housing bubble or what have you. Well, think about, look at that peak in this chart here. Think about how many homes were being brought onto the market back during that housing bubble. The supply just overwhelmed demand. The exact opposite is happening right now. We are extremely undersupplied. People want to buy homes. the millennials, even some, younger than that, are coming of the age to buy homes. They have enough money to buy homes. There's just not much available. Home builders are being much more disciplined. So this has positive and negative effects on the economy. We just thought this was really interesting to show people how incredibly tight the housing market is from a supply standpoint throughout much of the nation.
All right, so stock market's in a long-term uptrend, but there's a lot of rotation going on right now. Even that growth of value chart that we looked at, different sectors, things like that. We've got a presentation coming to you here shortly that will dive into the depths of that. But it's really important to note, inflation is having a lot of effects right now. We didn't really talk a lot about interest rates in this. We're going to be talking about that coming up, but so inflation's having a big deal, but it's normal when you come out of a low like this to have some inflation. So we're kind of at a place right now where it's not too extreme. It's normal right now. We'll see what happens from here. And then lastly, the housing market is extremely tight. A lot of times when prices go up, is it due to way increased demand? Is it due to limited supply? In this case, it's probably a little bit of both, right? We've got a lot of new buyers on the market, but we have really, really, really low supply, and that's why we're seeing houses go, literally like that right now. So, so as always, thanks for listening. If you have any questions, you know where to reach us at, and have a good rest of your day.